After a blockbuster run of initial public offerings in 2021 that saw 91 public issues hitting the primary markets, the pace has significantly slowed down this year. So far, Indian markets have seen about 20 companies approach equity markets to raise funds. Global headwinds and several other factors are also responsible for this. But there was an IPO which caught everyone's fancy. It set a record. The number of applications crossed the 6 million mark, something never seen before in the equity markets. A lot of the investors were the first-timers. So, we explain the IPO filing process from scratch for the uninitiated here. A company announces an initial public offering in order to raise funds from the securities market. The companies which approach the exchanges with the objective of raising capital utilize such net proceeds for expansion, repayment of debts, or other corporate purposes. For example, Delivery planned its IPO to raise 5,235 crore rupees, and the company said it would utilize the net proceeds towards the company's organic and inorganic growth initiatives via acquisitions and other strategies. Let's start with the categories of investors. The first category is that of retail investors, where individuals can invest up to 2 lakh rupees. Second are non-institutional investors who wish to apply for an amount greater than 2 lakh rupees. These include high net worth individuals, non-resident Indians, Hindu undivided families, companies, trusts, scientific institutions, and societies. Third are qualified institutional buyers or QIBs. They are commercial banks, mutual fund houses, and foreign portfolio investors. A limit of 50% of the bid is reserved for QIBs. They are not allowed to bid at the cut-off price and cannot withdraw their offers after the closing of the IPO. Fourth are anchor investors who are QIBs and wish to invest 10 crore rupees or more through the book building process. Once done, investors can apply for the minimum bid through online as well as offline method specified in the company's red herring prospectus. While investors need to fill an application form in the offline mode and submit it to their respective banker or broker, online IPO gives investors freedom to upload data through Demat account or via a trading interface. A Demat account allows investors to trade financial securities in a digital format. Then, investors can bid for a particular issue when it is open for subscription. Once they select their preferred lot size, the amount gets blocked through a process called ASBA, application supported by blocked amount, from investors' bank account. This amount does not get debited instantly. Once the shares are allotted by the company, which usually takes up to 10 days, the blocked amount is debited depending on the number of shares allotted to an investor. However, if the issue gets oversubscribed, that is, the demand for the issue is higher than available shares, the allotment is done through proportional basis or lottery system. Now let's understand how to check the share allotment. Investors can check their allotment status on the BSE website or through their online brokerage platform. In order to check the allotment status on the BSE website, investors have to select their respective issue name and enter an application or PAN card number. Once allotted, investors can buy more or sell those shares after the company gets listed in the secondary market.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.